Jack McIntyre. Jack, good to see you. Thanks so much for joining us.
Hey, good morning.
So you get paid for a living to allocate capital all around the world. What's your take on Brazil right now?
Well, so we're still constructive on Brazil, and everything you just laid out, it certainly could be a short-term risk. I mean, the normal pattern is you see a post-Olympics sort of hangover. Growth could slow in the short term, but we're thinking about the next 1 year, 2 year outlook. And from that standpoint, I still think Brazil looks attractive. I mean, they've got their issues, but it seems as though they're starting to deal with that. And you know, we're in a yield-starved world right now. You can still earn 12% yields on Brazilian bonds, local currency. So as long as we don't go into a global recession, I don't think we're going to be alone in allocating capital to Brazil.
Well, you would think that something like the Olympic Games in Brazil would create huge economic activity, right? You guys, wouldn't this supposed to be, this should be a major boost to the country, and yet
they couldn't fill some of the positions, some of the security forces. They had a mandate to fill in all these jobs, and we reported on it earlier this week. They couldn't fill those jobs. But isn't one of the biggest, actually two of the biggest concerns that are happening in Brazil right now is a stronger dollar situation, as well as the weak pricing in commodities. We've already seen oil come down. That's one of the biggest impediments that I can see investing in Brazil, even though their Operation Car Wash is happening and they're having a more pro-capitalist government.
So you're absolutely right. I think, though, that was a lot of 2015 where we saw a very, very strong U.S. dollar. The Fed certainly probably priced in or built up too high expectations in the markets in terms of where rate hikes were going to go. But, you know, the Fed's told us they're going to go slow. And then from a commodity standpoint, a couple of things. You know, you have to think about what's going on in China. So China has actually shown some improvement in their underlying economies. We've seen some supply get shut in on commodities. So again, we're in the camp. We think commodity prices are going to be stable. The Fed's going to go slow. The U.S. dollar is not going to go through this significant appreciation. And given those two developments, again, I think EM overall is still going to be somewhat constructive. And within that, I think Brazil might sort of lead the pack. You know, it's interesting, just to put it in perspective, the Brazilian real and the Japanese yen have been the two strongest performing currencies this year versus the U.S. dollar. You've got a very high-yielding, growth-oriented commodity currency doing very well, and then you've got a more defensive-oriented currency doing not quite as well.
All right, we will leave it there. Jack, real quick, in terms of your global allocation, do you like U.S. stocks? Just curious.
I do. I think so. Anything that's a little bit more risk on, I think will continue to do well, including equities.
We'll leave it there. Jack McIntyre, good to see you, sir. Thanks very much.